Assalamualaikum and hi everyone. So today we will present our group assignment for subject Basic Accounting. First of all, let me introduce myself and my group members. My name is Nur Arfa binti Jain. My matric number H22A1035 and my group members Haida binti Sazali H22A0696, Shazrina Yasmin binti Kamarudin H22A0753, Nurul Shafika binti Muhammad Ishamuddin H22A0274, Nurul Aida Afina binti Ahmad H22A0526, and the last one is Nul Hadri Milzam bin Ahmad Khairuddin H22A0328. We choose case study 2 for our assignment. And now let me start with the introduction part, which is definition of accounting. Accounting is the process of recording, summarizing, classifying, analyzing, and communicating information from economic events. Accounting is also a branch of mathematical science that is useful in finding the cause of success and failure in a business. Full set accounting started by making journals, ledgers, trial balance, the statement of profit and loss, and the balance sheet statement. Basically, accounting has two categories, which is financial accounting and management accounting. Financial accounting is provided to show accuracy and a fair picture of financial affairs, while management accounting is to help management make effective decisions about the business. There are three main functions of accounting. The first one is planning. Planning is the entity's short-term and long-term planning. The second one is control. Control is the day-to-day activities of an entity to achieve short-term and long-term plans. The last one is decision-making using information. This is to make the best decisions about the entity's activities to ensure planning is achieved. For example, whether to increase or decrease the number of employees, add more branches, buy or sell assets, and so on. Last but not least, accounting provides information about the resources available to the firm that are meant to be used to finance those resources and the results achieved through their use. Accounting is also one of the important things when you want to grow a business in a way that can be measured and predicted by every account about the business.
Now we move to the journal. These journals are based on case study 2. These ledger are contents from the journal. First, we have the capital account, bank account, and cash account. Next, we look to the another account, which is payable, purchase, sales, and purchase returns account. Then we can see the receivable, furniture, sales return, and drawing account. Lastly, we use loan, salary, stationery, and interest received account.
For Noah Enterprise, trial balance as at 31 October 2020. Amount for capital 18,000 ringgit, bank 12,000 ringgit, cash 53,000 ringgit, payable 6,000 ringgit, purchase 42,000 ringgit, sales 40,000 ringgit, purchase return 2,000 ringgit, receivable 10,000 ringgit, furniture 50,000 ringgit, sales return 3,000 ringgit, drawing 3,000 ringgit, loan 12,000 ringgit, salary 5,000 ringgit, stationery 1,000 ringgit, interest received 4,000 ringgit. The amount for credit and debit is balance, which is Rm 144,000 ringgit. Next, the profit and loss statement. The company are managed to get net profit Rm 1,000 ringgit. The final part is the prepare balance sheet statement. To get amount working capital to current asset must be divided to total current liability. Then, the working capital must be added with total fixed asset. The amount should be same.
The usefulness of the statement of profit and loss. The profit and loss statement refers to a financial statement that summarizes the revenue, costs, and expenses incurred during a specific period, usually a quarter or fiscal year. This record provides information about a company's ability or inability to generate profit by increasing revenue, reducing costs, or both. Moreover, these statements are often presented on a cash or accrual basis. The profit and loss statement is one of three financial statements every public company issues quarterly, annually, along with the balance sheet and the cash flow statement. Provide an in-depth look at the company's financial performance together. Statements are prepared using the cash or accrual method of accounting. It is important to compare profit and loss statements from different accounting periods, as may changes over time become more meaningful than the numbers themselves. The profit and loss statement is one of three financial statements every public company issues on a quarterly and common financial statement in a business plan, as it shows how much profit and loss was generated by a business. Then the profit and loss or income statement, like the cash flow statement, show changes in account over a set period of time. The balance sheet, on the other hand, is a snapshot, showing what the company owns and owes at a single moment. It is important to compare the income statement with the cash flow statement, since under the accrual method of accounting, a company can log revenues and expenses before cash changes hands. This document follows a general form as seen in the example below. It begins with an entry for revenue, known as the top line, and subtracts the cost of doing business, including the cost of goods sold, operating expenses, tax expenses, and interest expenses. The difference, known as the bottom line, is not income, also referred to as profit or earnings. Profit and loss statements important because it is one of the three types of financial statements prepared by companies. The other two are the balance sheet and the cash flow statement. The purpose of the profit and loss statement is to show a company's revenues and expenditures over a specific period of time. Usually over one fiscal year. Investors and analysts can use this information to assess the profitability of the company, often combining this information with insight from the other two financial statements. For instance, an investor might calculate a company's return on equity. After that, we can make wiser decision. If you have a statement of profit and loss on hand, you can look back to reviewing your company's performance over the selected period. With this decision, you will be able to invest money back into your business and make decisions that should require dangerous guessing. Next, the company have proof of the success of your business. Having a profit and loss statement on paper means that you can show chronological record about your business throughout the operation, allowing you to play your cards around investors or with buyers if you have any intention of selling the business with you. This profit and loss statement is also very important for each company, as the company can review it regularly and will give you an insight into the area of business where you are making money or losing money. It will also provide you where you spend your money, which can help you determine where you might be able to cut costs. That's it. Thank you.
The usefulness of the balance sheet statement. The balance sheet is a financial statement that lists a company's asset, liability, equity, capital, total debt, and other items as of a particular point in time. First, balance sheet provide with a detailed breakdown of present liabilities such as short-term debt in the off-account payable, inventory, or other debt. Second, to judge a company's profitability, investor may also review the balance sheets of publicly traded corporation. Third, the balance sheet, which is a dynamic document on which regularly record new assets you buy or liabilities your business incurs. Last, making choice, the balance sheets also aid in effective account management. A financial document called a balance sheet lists a company's asset, liabilities, and shareholder equity.
Okay, we move to the last part. In conclusion, through this group assignment, there are many things learned about account. Team members at all levels in the hierarchy have important contribution to make to the discussion. Subsequently, the business transaction will be recorded into the journal, ledger, and trial balance. There are 5 account categories involved in the accounting transactions, namely assets, liabilities, and expenses, owners' equities, and revenue. This company used a ledger to record complete transaction in order of date as well as detail and information. A business transaction is defined as any affect the financial position of a company and requires recording. At the end, a trial balance is extracted from the ledger account balance to check the accuracy of entries.